Now, as many of you guys might already know, JEPI or the JP Morgan Equity Premium Income ETF has been sort of a fixture in my long-term dividend-focused portfolios for many years now. Now, I started buying JEPI several years ago in the hopes to earn anywhere from around 10% or maybe even 12% yield as far as dividends go. And because I'm an investor that's fond of the cover call strategy and less volatility than the rest of the market, I found that JEPI was sort of the perfect pick for my portfolio, which is why I bought over 1,200 shares over the past several years. Now, fast forward a few years later, there's so many other covered call style ETFs to choose from that offer similar things that JEPI does, and even some that I think do a little bit better of a job. But as of right now, I still hold all my JEPI shares that I have been holding, that I've criticized over time, thought about selling, etc. And in today's video, I want to talk all about that and then some. So if you want to see how much I earn as far as dividends go when it comes to JEPI and some of my newer favorite covered call ETFs that compare to this one, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, according to my dividend tracker, across all my portfolios combined, as of right now, I have around 1,218 shares of JEPI, which I own on average at around $52 or $53 per share. Now, this means that I'm not only up a little bit as far as capital appreciation goes, because JEPI, as of filming this video, is trading just shy of $60 per share, but also obviously over the years that I've been holding onto these shares of JEPI, I've earned dividends every single month ongoingly. But just to back up for a second, in case you guys might be newer to dividend investing, you don't really even know what I'm talking about, to go over JEPI real quickly, what this ETF is, how it works, etc. It says right here in the website overview, seeking premium income with lower volatility, which, like I said during the intro, is something that I'm interested in. As a long-term investor, I don't mind underperforming the overall market just by a tad, as long as it comes with less volatility and allows me to sleep better at night. Now, it says JP Morgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity market exposure with less volatility. The portfolio says defensive equity portfolio employs time-tested, bottom-up fundamental research process with stock selection based on a proprietary risk-adjusted stock rankings. Discipline option overlay implements written out the money S&P 500 index call options that seek to generate distributable monthly income. And regardless of whatever you want to say about JEPI, the ETF is up around 18% on the max time frame as far as ETF price alone, which, keep in mind, a lot of other income-focused cover call style ETFs have not fared as well. And there was a lot of investors not all that long ago that were sort of writing off JEPI for dead, me being one of the ones that was considering selling off my JEPI for a better quote-unquote cover call style ETF that's very similar. And although I never sold any of my shares of JEPI, I still have 1,218 shares across my portfolios. I have not deployed another single dollar into the JP Morgan Equity Premium Income ETF for several months or even maybe over a year now. Now, this simply goes back to the things I was talking about earlier. There's so many different cover call style ETFs out there that offer what JEPI offers, but like I said, in my opinion, does it even better. So stay tuned towards the end because I'm going to go through multiple of these ETFs to do this. But JEPI's dividends haven't been all that amazing over the past year. I think we're looking at around an 8% yield as far as the trailing 12 months go, which isn't horrible by any means, but for an ETF that trades more or less sideways, maybe even down during certain market conditions, I'm at least trying to earn 10%, 12%, or even 14%. Which is very common across the market these days. Now, JEPI's most recent payouts have been much larger than the previous. We have two payouts as of recent that were almost 40 cents, which it's been a while as a JEPI holder that we've seen anything in this range. I mean, we'd have to go back all the way till late 2023 to where we saw a 42 cent, 39 cent, and 35 or 36 cent dividend. But like I said, even though JEPI hasn't paid a massive yield as far as the last 12 months, over the last year, the ETF is up around 11.5%, which is substantial again, considering this ETF is income focused. I can't speak for everyone, but I don't think many investors, including myself, bought into JEPI assuming that you're going to earn 12% as far as capital appreciation goes. I'm more or less figuring that JEPI is going to trade mostly sideways and pay me 10%, 12% per year because the underlying strategy. But because JEPI has paid around 8% of last year and grown around 11%, I don't think any of us have anything to complain about. Which brings me to my next point. As of recent, I went through and I actually broke down the numbers because I was actually curious on what JEPI has returned over time. I mean, with my current 1,218 shares, with the most recent payouts, I'm earning upwards of $475 per month in dividends, which is substantial again compared to the most recent payouts over the last year. It really does make a difference when those payouts are larger, especially if you have over 100 shares or 1,000 shares. It definitely makes up for it. But on a larger time frame over the last 4.38 years, I was interested in seeing what a $10,000 investment and dividends reinvested back in would have actually returned for investors that bought JEPI from the start. Now, keep in mind, I personally did not buy JEPI right at inception date. Like I said, across my portfolios, I think I own JEPI at roughly $52 to $53 per share on average. But over the last 4.38 years, we're talking on average with dividends reinvested along the way, 13.38% average annual total return, or 73+% total return. Now, with dividends not being reinvested, we're still talking 11.55% on average, or 61.34% total return, which still is not bad whatsoever. So this kind of got me thinking, what is it about JEPI that investors just don't really like? I mean, these days, as far as income investors go, no one really talks about JEPI all that much. And as far as dividend or dividend growth investors, you don't really hear much about JEPI also. And this is simply because, in my opinion, I think there are better covered call style ETFs that do reference the S&P 500, but like I said twice earlier, do it a little bit better. Look at SPYI, for example. This ETF distributes high monthly income, which is generated by investing in the constituents of the S&P and also implementing a data-driven call option strategy. Now, along with that, SPYI also takes advantage of tax loss harvesting opportunities, which means they're going to be doing this all in a tax-efficient manner. And on top of that, this ETF sometimes will actually buy call options, seeking upside capital appreciation, which could be amazing if we're in a bull market. Now, on top of that, SPYI pays the same exact amount more or less every single month as far as distributions go. And I say that because within a range of 48 cents to 50 cents, that's more or less what we've received since inception. Now, this has given investors around a 12% distribution rate, which is not bad whatsoever. And all along with that, SPYI is in the green on the max time frame. It's of 5.35%. There's other S&P 500 covered call style ETFs also that have come about. JEPI, this is a Goldman Sachs one that I've talked about multiple times on my channel now. I'm a huge fan of this one also. This ETF is a little bit different than JEPI because it once again utilizes the covered call strategy, but does it dynamically and sells call options, which might cover anywhere from 25 to 75% of the portfolio, depending on what the actively managed ETF wants to do in that time frame. Now, I say all this to say that I do think that some of the harsh words and or hate on the JP Morgan Premium Income ETF is a little bit harsh, considering this ETF has returned investors anywhere from 11% to 13% per year since inception, which honestly is not bad whatsoever, especially for an ETF that's seeking income potential a lot sooner. But I do think that the reality is that there's so many other covered call style ETFs with different strategies, and some investors are more interested in some of these newer strategies than that JEPI offers. But still, JEPI is not a bad investment whatsoever. I'm probably going to keep the majority of my JEPI shares moving forward. But if I do decide to sell them off and move that money into SPYI or something equivalent, I'll of course let you guys know. So now that we talked about the JP Morgan Equity Premium Income ETF, I shared with you guys how much I get paid on a monthly basis with the amount of shares that I have and sort of my total thoughts about this ETF moving forward. I lastly want to hear from you guys down below. Do you currently have any shares of JEPI in your long-term portfolio? Let me know why or why not in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.